A warm welcome to everyone. Today we are going to do with the introductory chapter of financial management. Financial management is an integrated decision-making process concerned with acquiring, managing and financing assets to accomplish overall goals within a business entity. Speaking differently, it is concerned with making decisions related to investments in long-term assets, working capital, financing of assets and so on. So, in financial management, we are going to deal with what is financial management, what is the scope of financial management. That is, there are two approaches. One is the traditional approach, another is modern approach. What are the components of financial management? Importance of financial management. What is finance function? What is investment decision? There are two types of investment decision, finance decision and dividend decision. Functions of financial management. Now, first question arises in our mind, what is financial management? Financial management is the capacity of an organization for excellence by managing its resources. Financial management pervades the whole organization as management decisions almost always have financial implication. That is how efficient management take decision regarding the financial management of the organization. This is actually what is financial management. Financial management entails planning for the future of a person or a business enterprise to ensure a positive cash flow, including administration and maintenance of financial assets. That is, planning the future, keeping in mind the resources of the business, is financial management. The primary concern of financial management is assessment rather than technique of financial quantification. That is, in financial management, we do the assessment rather than quantification. Some experts suggest that financial management is money management, science of money management. Now, scope of financial management. The scope and function of financial management is classified into two categories. First is your traditional approach, second is your modern approach. Now, what does traditional approach says? According to this approach, the scope of finance function is restricted to procurement of funds by corporate enterprise to meet their financial needs. So, traditionally, what is financial management? It is the procurement of funds from which all sources the company can avail the funds to meet its financial needs is traditional approach. The term procurement refers to funds externally as well as interrelated aspects of raising funds. But there are some limitations of traditional approach. This approach is confined to procurement of funds only. Now, that is, this approach only tells us that from which all sources we can collect the funds. Second limitation is it fails to consider an important aspect, that is allocation of funds. We are only talking about the procurement of funds, but we are not talking about allocation of fund. Then it deals only with the outsider, that is investor, investment bankers. We don't deal with the inside sources, but we rely upon outside sources. Next limitation, that is internal decision making is completely ignored in this approach. Then the traditional approach fails to consider the problem involving in working capital management. There is nothing has been talked about how to manage the working capital. Then the traditional approach neglects the issue relating to allocation and management of funds and fail to make financial decisions. The next approach is modern approach. According to modern approach, an analytic way should be there for looking into the financial problems of the firm. We should think in an analytical way that how we can solve the financial problems of the firm. According to this approach, the finance function covers both acquisition of funds as well as allocation of funds to various uses, right? So according to the modern approach, apart from thinking about the procurement of funds, we have to think about the allocation of the funds also. That is both ways, procurement and allocation of the funds. And financial management is concerned with the issue involved in raising of funds and efficient and wise allocation of funds. That is, we have not only have to think from which all sources we can procure fund, but we have to think the funds we are already having, where to efficiently allocate them. Now, main components of modern approach is that how large should an enterprise be and how far it should grow. The second content, this approach suggests that in what form it should hold assets. In what form it should hold assets. And the financial management is concerned with finding answers to the above problem. That is basic criteria or basic purpose of financial management is to know from where to procure fund, how to manage fund, and where to allocate funds. This is all about financial management. Now, the components of financial management, there are 5 basic components of financial management. First, we have studied also, we have to do the planning and analysis. Second is management. Management of your assets and management of your liabilities. When you do planning, when you do management, the third step comes, you have to report to the management. Then transaction process takes place. That is, if you report to the management take decisions, and then when the decisions are evaluated, if the decisions are good, then it's okay, but if the decisions are getting wrong in some direction, there need to be done some controlling. So there is a pyramid that is showing this 5 components, that we start from the top, planning and analysis. After planning analysis, we do the asset management, asset and liability management. Then we do the reporting. Then after reporting, transaction processes start. And last is the step of controlling. Now, what is the importance of financial management? Financial management is concerned with procurement and utilization of funds in proper way. We have already studied it, that from where we have to raise the funds and the funds we are raising, and how effectively we have to allocate or utilize those funds in order to maximize or get maximum gain for our profits. So because of this, there are following advantages, that if we do financial management, it will help us in obtaining sufficient funds at minimum cost. We have to think about, if you want to raise funds, if you want to raise procured funds, which source we should go for, and that source should be at a minimum cost. Second thing is that ensures effective utilization of funds. Suppose you are having 100 rupees in your pocket and you are buying only two things, that you buy one chocolate and buy one wafer. But on other hand, if you have 100 rupees in your hand, you are managing your money in such a way, you are taking small packets of chips, you are taking small bars of chocolate, you are taking a small cane or a bottle of beverages. This way you are gathering more amount of eatables. So this is actually what you are planning and management. This is what all the management has to do. How effectively that management is utilizing the funds. Then try to generate sufficient profit to financial expansion and modernization of the enterprise, because when by day techniques are coming, you need funds to apply those techniques. So you need to do expansion and modernization by applying the funds. Then ensure safety of funds through creation of reserves, reinvestment of profit. If you have funds, the whole amount of funds cannot be invested. You have to plan those funds in such a way, in case of any future contingency, you have to create reserves. This is also a part of financial management. Now we talk about the finance function. There are basically three finance functions. First is your investment decision, second is your finance decision, and third is your dividend decision. Now what is this finance function? This finance function is related to decision making. Whether it is related to investment decision, whether it is related to finance decision, whether it is related to dividend decision. Basically it is a financial decision. So there are, you can say, finance function or finance decision are one and the same thing. So there are three types of decision. First is your investment decision, second is your finance decision, third is your dividend decision. Now talking about the first decision, that is investment decision. This decision relates to careful selection of assets in which funds will be invested by fund. That is, name only suggests it talks about the investment. Now you have the funds, you have to take decision where to invest, in which assets you have to invest in order to get maximum return from those assets. It involves buying, holding, reducing, replacing, selling and managing assets. Now, common question involving the investment is that, in what line of business should firm engage? Should the firm acquire other companies? What sort of property, plants, equipment should the firm hold? Should the firm modernize or sell an old production facility? So these all things, all these questions should be kept in mind before taking any decision regarding the investment. Second is your financial decision. Now financial decision again require with the decision regarding the procurement and allocation of funds. Now finance decision involves the acquisition of funds, from which all sources you should acquire funds for the long term investments. And while taking this decision, financial management weighs the advantage and disadvantage of various sources of finance. You have to first evaluate from which source of finance you have to take, or you have to procure, or you have to acquire funds, so that it is advantageous for the organization. Then the business can either finance from its shareholders, which can be subdivided into equity share or preference share capital and the accumulated profits, or the company can procure the finance or the funds from its borrowings, that is debenture holders or the long term loans, whichever source you want. But the cost of acquisition of these funds should be minimized, then only it is profitable for a business to go for the investment, if the funds are being acquired at a minimum cost. The third finance decision is dividend decision. In this decision relates to the appropriate, now how you have to decide whether you have to retain profit, that is called retain earnings, or you have to distribute your profit in form of dividend. So this is also a decision called dividend decision. So these three type of decision we studied. Under these decision we decide our dividend policies. Under these decision we decide from where to procure funds, how to manage working capital. So these three decisions are main core of finance function. So the two major alternatives that a firm has, either to retain profit or distribute the profit to the shareholders. While declaring the dividend, a large number of consideration has to be taken. What should be the trend of earnings, whether you should adopt a stable dividend policy, what is the trend of the market, what is the requirement of funds in the future, what is the cash flow situation, what are the restrictions under Company Act, what is the tax implication of the shareholders. So these three are the main analogy or broad classification of decision, financial decision. Now what are the objectives of financial management? We have, basically any management require profits. Second, you want return maximization, and third, you want wealth maximization. So we have already discussed the basic functions of financial management, or basic objective of financial management is to, first is a profit, you should earn more profit, you should get more return on investment, and moreover there should be wealth maximization of the firm. And next is the executive function of management, that is there are two, one is executive and institution and routine functions. Now executive functions are the decision making in financial, these all are executive functions, that is your financial, investment and dividend decision making are your executive functions. And incidental functions are, that is reporting, your record keeping, planning, credit management, these all are your incidental, that is performed by the accountant and assistant, these are your incidental. Thank you very much.